ladies and gentlemen, boys and girls, children of my age, this is the panel that you all have been waiting for, even if you didn't know it was happening. But subconsciously, you were waiting for it. So I'm going to announce our speakers. Let me first talk about Naman. Naman has been in a lot of industries and spaces, from finance to VC. VC ho bhare aap? My volume has gone too high. Can you? Acha. Hi, Naman. Welcome. Thank you so much. I was just reading your bio that from finance to VC to building communities, and now he is looking out for DGen. So DGen Janta idhar agar hai, to clap out loud, make some noise. All the DGens in the house. Super. He started the idea of ZKX along with his co-founders initially from aping into Wall Street bets to now raising money from the largest investors of the ecosystem. मेरे को ऐसे लोग बहुत पसंद आते हैं जो लोग पैसे रेज करते हैं और हम
खर्च भी करते हैं.
सर खर्च नहीं करोगे तो वो चेन कैसे बनेगा? Right? So that is why I said that this is going to be a very, very important panel for you guys. And he is now building a decentralized exchange on Starknet. Ladies and gentlemen, please clap out loud, make some noise for the co-founder of ZKX, Naman. Thank you, Naman. Sir, zara zor se karo yaar. And he totally deserves it. नमन, बाद में ना एक सवाल पूछूंगा. नहीं, अभी पूछ लेता हूँ. थोड़ा एनर्जी और हाइप अप करने के लिए.
Guys, this is going to be a very rad conversation on something that you've been waiting for. We've been really building something that is super interesting. Karan might be hating me for what I'm about to build over here and to explain about, but you're going to love this shit. Trust me on that one. We're building something for India, for emerging markets, for players like you, give you the same opportunities that people in New York and Wall Street really gets. And that's what the courage is all about. This is for India, by Indians.
See, but talking from the Indian mindset, nah, वो सब ठीक है. तुम airdrop कब कर रहे हो भाई?
Airdrop, rewards, it's all going to be eventually given out. There's a lot of alpha coming out, so wait for it, trust me. It's worth the wait.
It's worth the wait. A lot of alphas coming out for the guys in the Web3 space. You know, जब alpha सुनते हो तब कान खड़े हो जाते हैं. So Naman, thank you so much. You can please take your seat. Thank you. The next speaker who I'm going to call upon on stage, she's also had a very interesting journey. I was talking to her outside. She is right now working with Sequoia Capital. Is the space where we all want to be. और एक meeting करवा दो, madam. एक meeting करवा दो. Ladies and gentlemen, give it up for the trader to being into tech and now a very successful venture capitalist with a global experience. Please give it up for her. Guys, a little louder, yeah? Little louder. Thank you so much, Kriti. Please, thank you. Lovely. So we have had two people. The next person who I'm going to call upon is a very dear friend. He has been an immense support to me in this space for over this year. And in fact, I kind of call him like the father figure of Web3 in India. We can we can go on talking about him a lot, but he also runs, I think, the ultimate and the #1 Web3 content on YouTube, or there is in Hindi. Ladies and gentlemen, boys and girls, please give it up for the father of Web3 in India. I can overhear these guys. Kashif Raza, everybody, give it up for him. Louder, louder, louder. Come on, make some noise for Kashif Raza. All right. The next speaker who is going to be on the panel is, I think, by far one of the most interesting personalities I've met. Right? If you think that you have a lot more energy at the age of 18, 19, whatever his age is, I think he must be 26, 27 maximum right now. But his energy, his wit, his confidence and his knowledge is insane. He is the guy that the entire country looks up to when it comes to the governments, the laws, and in the Web3 space, the Web3 degens look up to him for information and advice. So, ladies and gentlemen, please put your hands in the air for the youngest kid in the Web3 block, Ajit Khurana!
Thank you.
So guys, one more time, please make sure you take pictures, right? You tweet and you do a lot of things. And then if we have time, I will take your questions to them, right? Because I already have a question for you. मेरा कुछ करने का बाद में. So please, everyone, I know everyone wants their time, but it's over to you. The stage is all yours. Naman, thank you for bringing them all here. The Web3 guys have done a mammoth task organizing this event, and guys like you have made it even more interesting by bringing Kashif, Kriti, Naman, and Ajit. Thank you so much.
Hey, is this on? Can you hear me?
Oh.
I can like barely hear you, so I'll ask that same question again. Can you hear me? Yes! This never fails. You repeat a question to an audience, second time they shout it out. I have not tried the third time as to what happens then. What we'll do is we'll begin talking about Web3. Let me begin with the person whose name is on the board. Oh, the board changed while we were looking away. So since ZKX is the sponsor, I think we'll begin with them, right? They gave the money as opposed to, Kriti. Kriti works for Sequoia, multi-billion-dollar fund. I don't know if you guys know this, but in the induction program of Sequoia, the venture capital firm, they are told that everybody who is part of Sequoia at all points of time should at least have $1 million of cash on their person wherever they go in case they have to do spot funding. So she has at least that much. If you want to be funded, please approach her. Right? I will come to you later, Kashif. Right? Because, when Vaibhav was introducing that the next speaker is the father of Web3, so I'm looking at it. So I'm like, मेरे को शायद web grandfather समझता होगा. As in like, what is going on here? But all the same, I'll begin with you. Naman, Web3 conference, India is great. The tag is Web3Conf India. Almost everybody in the audience is Indian. Are we like needlessly self-congratulatory? What I mean is that, Mera Bharat Mahan is good when you're sitting in Bharat, right? But is there some characteristic about India that actually makes it a better place or more suited place for Web3?
100%. Let me answer it in a different way, Ajit. So, India is also one of the largest Web2 markets. If you look at overall venture capital investing in the last 5 years, India has been pretty much on top of receiving most venture capital. Why? For very simple reasons. We have extremely high internet penetration, the right median age, the right adoption features, really. We are really an economy which really takes up new technology extremely quickly, much more quickly than our regulation can catch up with it, but here we are. And that is something that makes India extremely unique. The market is too big in general, adoption is extremely high, there's disposable income right now. I would say the people sitting in this room and people like you that represent maybe like the top 1 or 2% of the country spends $1 trillion running every startup that is launched in India. It's the same crowd over here. And the same crowd will basically is one of the top, I would say, Web3 adopters in general. And this is really what India is all about. It is about really you go big or you go home in India. And this is Web3 is really here to go big.
Excellent. What I'm doing is I'm not making it very interactive yet, but that's the audience's job. Kriti, I'm coming to you. And in true traditional Indian style, Naman and Kashif and I were given microphones. Kriti was not, because we have already tried to subdue a woman's voice in Indian society, but we are not going to do that in Web3. I have two questions for you, Kriti. Number one, if you look at the IT industry or you look at the investment industry, you find that at least in the earlier stages of the industry, the participation of women is very high, probably to the tune of almost 50%. Very advanced stages, maybe not. But when you look at Web3, including this audience, even at the early stages, we don't see as many women as we see either in IT or in investment, and Web3 is like both of those. Do you have any theory as to why that is? Because I don't.
No, I mean, I don't want to theorize something that I haven't researched well, but what I would say is I think just Web3 is early. We have to understand that, like, Web3 conference happening for the first time in the country, right? So we're just very early in this journey, and it's only a matter of time is what I would like to believe. Yeah, but honestly, I don't have a theory and I don't want to assume.
Let me throw a theory then.
Okay.
So way back in 2012, when the startup boom was just starting, we were saying similar things about startups, that fewer than 10%, the real number was 9% of startups had women founders, right? Or at least one co-founder who was a woman. And when I was asked, why is it that there are such few women? Here is something interesting, and this was a fact, okay, data verified fact, that if you look at the number of startups which had women founders who applied for funding and got it, the startups with women founders actually had a higher conversion. That means more women who were seeking funding were getting funded. It is just that they were not entering the gate, which means there were fewer women who were creating startups. I think Web3 might be undergoing the same thing because there's the same polity here. Second question for you. Winter, crypto winter. Here's something interesting. VCs themselves raise money. For those of you who thought that they really come in rich and they're born rich, well, VCs have their own investors. And they tend to raise the most money in good markets, bull markets. And then comes the bear market as we are in right now. And they're sitting on all that money, but the opportunities are scaring them. As in, they're getting a little stingy, they're getting a little slower, they're getting a little cautious. So I'm not going to ask you whether we are in some form of winter because it is a little chilly for sure. But how do entrepreneurs, all these people in front of us, who are approaching you or investors for funding, how should their behavior get modified based on the current market situation?
No, that's a fair question. And I think, let's just go to the source of why we are having this conversation in the first place, right? Historically, crypto has seen a few ups and downs, I guess like 3 in total. But this time, the relatively chilliness in the air is not just isolated to Web3 or crypto, right? I mean, globally, all the markets have massively corrected. Public markets have corrected. A lot of valuations have crashed. So I think it's just, in general, one of those moments where after the peak of a bull market, you come to realize and make sense of revenues and associated valuations, what's really the value proposition, and is that actually resonating with your end customers, or are they just like, so there's just like a harder question on whether you've hit PMF or not. And if you were to now think about this ecosystem as an early stage founder, I think not much changes. The reality, like Ajit said, is that there is a lot of cash still sitting with investors. And it's not like that the money has gone anywhere. Most of this money is actually for a 10-year cycle, sometimes a 5-year cycle. So money is pretty much waiting there. I think the question really is more around, are you closer to PMF? Or do we think we are close to it? So I think as long as you're building your company the right way, as long as you're actually going after a problem and finding a solution that genuinely makes the life of your customers, be it a B2B customer or an end retail user, 10x better, nothing really changes. PMF is PMF. A bear market PMF is tougher, but if you honestly survive the next few quarters and months, like, you're only going to have a ball of a time in a bull market. So I think for this room...
So that is called a politically correct answer. That is called an answer which works in all seasons. Like PMF, as in, tell me one VC who does not want PMF. Tell me one VC who does not want good economic model. So before you react, I'm not going to let you escape. And the reason I can take some liberty with Kriti is that when I used to be part of IIT Bombay's business incubator, she was still a student. So I have to look up on you as a
I was a founder then.
So here's the thing. See, I understand. You are a VC, you want good investment opportunities, and everything you said is actually right. But it is not very helpful. Often, the most accurate answer is the least helpful, because the most accurate answer to every question in the world is, it depends. But that doesn't make it helpful. So we will just check. How many of the people in the audience are presently fundraising or would soon like to raise funds from investors?
No, many.
Sorry, decent. I think the number is like 20. Excellent. In fact, that guy is like sitting and waving at me. Don't forget me when you are throwing all your money around. Thanks. So here's the thing. I agree with what you said, but I want a little more. For instance, I will try to prompt you, but you can ignore my prompts. Should they consider lowering their valuation because the market is bad? Should they change terms if they are releasing tokens as opposed to equity? Earlier, investors would not care about when the token generation event happens. But now we stare at the prospect that it might happen 12, 24 months later. That might change investor behavior. So I'm trying to get some bear market gyan.
Okay. So I think then I'll just go more targeted in terms of like what are some of the inputs to keep in mind. As compared to last year, I would say the valuations in private markets have at best corrected 15%. So 15-20% come hue hain. But public market mein actually 70-80% gir gaye hain, right? So for a company that's actually launching tokens pretty early in their journey, something that stood at 600 million FTV, let's say, or something that like where token price was at like whatever 600, 800 million equivalent, today stands at 100, 120 million. So like if a project that's actually seen so much traction and has a lot of developer community going on stands at 100 million valuation, how do you justify a pre-launch product at still 15-20 million? Like it's impossible to justify that anymore, right? Because as Web3 investors, you actually have access to token, like you can purchase tokens in the open market also, right? So I think first of all, the biggest question to yourselves is as you think about valuing your own company in an early stage, and I know it's a hard bullet to bite as a founder, right? Because what you think you're building is very valuable. But the reality is that when you launch a token too early, you let the market find the price for the token, and market oftentimes ignores the fundamentals. They actually go by speculation कि अच्छा अभी इतना ज़्यादा supply demand ऊपर नीचे हो गया तो maybe like just the price goes up, right? If you have to justify the valuation of your token on fundamentals, I think the private market valuations will at least correct by 50%. So जो भी आपका expectation, whatever you think you could have raised last year, I think that would be a drop that you will see. Now there will be some out of the ball projects that might still be able to command 70-80% of what the valuation would have been last year, but that is the ballpark I would say on the point number one, which is valuations. On the second part, in terms of delaying the token launch, I think one thing that this bear market has really taught us, and I was chatting with Naman about this, I can be wrong, but my view is that delay the token launch till you really have a very good utility for the token. Launching a token for the heck of it does not help. Find the utility first, have a very engaged community that actually wants your tokens, not just to quickly get the token, get a price jump and then dump the token and make that short-term return, but actually when you have a community that wants to be with you long-term, which will take 12, 24 months, maybe 36 months, God knows. Don't be in a hurry to launch a token. That's been my view in general.
Excellent, thanks. You know, you are the lady with all the money on this panel. The rest of us seek money, right? So your gyan is the most valuable. But I'll come to Kashif now. Kashif, grandfather of, great-grandfather. What were you of Indian Web3? Uncle. Santa Claus. Yeah. So
I'm getting a little nervous today because I am supposed to ask you questions and you are asking me questions. It's like a Viva in the college. I can recall of that time.
No, but ठीक है. So Viva में, the thing is you can fail, but you are Kashif, you never fail. So here's the thing, that wherever you go, in any sane conversation around crypto, there will always be things like, hey, there needs to be education, there needs to be literacy, needs to be knowledge, and that is the area you are focusing on. Having said that, what I find is, if you look at consumption patterns, data consumption pattern, YouTube video consumption patterns, Telegram content consumption pattern, I think we are still at about a 90+% related to price movement. Yeah. As in which token will go up, which token will pump, as in that is the entire knowledge and education people are seeking. Like for instance, while people may know what a blockchain is and some basics around it, but developing a perspective around it has not happened. Yeah. What is the reason? As in, why is it that people just don't care, or is it that they are being misled?
So I think, I'll just say two things. I mean, one is that, we all have this emotion and we all go through those emotions. Like we have an emotion of fear, we have an emotion of love, betrayal, and greed. Greed is one of the most strongest of emotions, right? Now, what is happening is, since this industry is in very early phases, this reminds me of a time when Web 2 was evolving during those early internet era. The same thing was happening at that time as well. But it's just that we didn't had any social media at that time, so we couldn't have that level of an impact. But if I tell you, when internet was evolving, there were close to 450 IPOs in US alone when there was this internet boom. And in next year and the subsequent year, we saw that those IPOs out of 450, only 50 and 70 were remaining, the actual projects that were existing. So even today, if you see, as this industry is evolving, we think that every single project that is coming up is going to be huge. It's going to be big. And because of the social media impact, it's very easy to communicate that hype, to communicate that FOMO in a much easier manner. Like you have bots and you have social media. So that plays with the psychology of the investor and consumer. So whenever we look at a project, we say, oh my God, this is going to be the next one. This is going to be the next one. And these next ones have actually crossed 20,000 tokens, by the way. Now, these 20,000 is going to work? No. So what is happening at this moment is that the investor is trying to get that one Bitcoin or the one token that is going to repeat the success of Bitcoin or Ethereum. And that is fine because it's actually the greed that is taking over. Now, what happens? The only medicine to greed is education. And the industry is flourishing, but the education platform that can actually provide you with the right content, right information, right structure, right basis is not evolving at the same speed. And I think that is what I'm trying to do through my initiative. And there are many platforms that are coming up who are actually trying to give you the right education that, okay, what is the basis of it? What is Web3? And why there are many projects that are not going to survive and that they're going to fail in future.
Give me a second, I'm interrupting you, but here's the thing. The total percentage of Indians who have had some exposure to crypto, by that I mean that they purchased it at least once, is roughly around 1.5%. Right? That is, regardless of what the numbers you have heard of outside, this is probably the best estimate you're hearing. Right? Having said that, educating that 1.5% versus educating the remaining 98.5% is completely different. For example, if you see what journalists have been or TV anchors have been screaming for the last 24 to 48 hours, it is all oriented to the 98.5%. In fact, I was on CNN News 18 and the journalist asks me that, when people in crypto hear about this hawala and money laundering, it must really cause them panic. I said, no, the people in crypto have been hearing it from day one. It is the remaining people who are not in crypto. So you are talking to a largely converted audience, right? Let's talk about the people who are not converted. How do you educate them?
So yeah, it's very difficult to be very honest because most of the people they're who are not in crypto and who are outside the crypto, they generally get their first information from their friend only. So like I got to know about Bitcoin from my friend. Similarly, there are many people sitting here, they wouldn't have heard crypto in their college or during their classes. They must have got it from one of their friends who must have told them this information. And generally, friends are giving you that information what they know. So what happens if somebody is telling you, I invested in Doge or I invested in some meme coin or I invested in some small cap and I got so much money. So from there you got this thing, okay, I really need to invest or if I'm missing something. Right? So probably that is one reason why, because it is very difficult to actually educate people in the first instance. I'm 110% sure that whosoever enters into crypto actually suffers a loss at some point of time. If you speak to people, either they have lost crypto or they have lost in terms of trading. And I think that is the stage where you get to start learning about it. Okay, fine, I made some mistake and let me just learn about it. Because I'm sure there are very few platforms who are actually giving you the right education, and the education platform are not growing to an extent where they should have grown. And I really want, because I see that many people raise their hands and they're trying to build something in the Web3 space, but I really want a dream scenario where many people are interested in giving the right education or they want to build an education platform, because that is really how the ecosystem is going to grow in future.
So when Kashif, you were describing what being in crypto is like, the way he described it was like being in crypto is like being in love. If you have been in crypto, you have definitely suffered loss. Yes, yeah. Right? So I can. If you are in crypto, you are focusing only on one thing. So Kashif, really, ये थोड़ा ज़्यादा personal हो रहा है. We really are not looking at all your personal life stories here, right? And he's like, initially there might be fear, right? But eventually it is greed. It's this double meaning conversation. I just have to censor it right now and come to the smartest person on the panel. So I'm going to ask you 3 questions in rapid succession.
Yes.
Number 1 is, see, all of these people seated here and here are trying to make their career in spaces around Web3, right? So many of you don't know this about Naman, but Naman was doing extremely well prior to Web3, unlike the rest of us who were just like, floundering, and Web3 came and saved us. But Naman was the India head of SOSV, SOS Ventures, which was almost a $1 billion fund, and he was the India head before he got into crypto. So I have three versions of the same question. Question number one is that, are all of us doing the right thing by trying to align our careers with Web3? Because you gave up a very good career to get into Web3. Number two is that unlike the other three people on the stage, who also are obviously part of the Web3 ecosystem, you are a token issuer, which I think the three of us have not been personally. How does that journey happen? Because, we all did startup equity. Every one of us has gone through that e-commerce boom, and probably I have gone through the .com boom also. How is this boom different for somebody who understands the traditional finance? Again, both at a personal level as well as the founder level. And the third, really, which is something I want to tell you. So I flew into India very early yesterday morning. And if somebody asks me, why did I come to this event? Of course, it's a great event. Congratulations, organizers. But the one, all organizers, thank you. But the one project that is my favorite project and is actually ZKX. So while they are a little too modest, but when you guys are done with this, please sign up to their Twitter and other handles and stuff. It is, according to me, that every one of us who is in crypto is looking for the next Polygon, which starts from like less than 1 cent and becomes $2. The next Solana, which goes 100x. The next Dogecoin. Oh no, let me not draw that analogy.
Wrong example.
Wrong example. And the next Bored Ape. Kashif comes in and says greed. He's still not able to get out of his love life discussion. But anyway. So I think, in my opinion, of my portfolio, you are like my top 1 or 2 in terms of the hopes I have. So all these 3 points that I covered, please share your thoughts on those.
Thank you so much, Ajit, for that. Let me start with the first one. So when we were in venture capital, and I've been around the block. I've also been a founder before. So this is not like my first time really founding a company. A failed founder. Let me be very clear on that. You have to be a failed founder to do it right the next time. But I also went into venture capital in the middle because I realized, well, I'm not, wasn't able to really figure out the first way in 2015. Let's see the other side of the table. And it was extremely interesting, at that point, I think it was 2016-ish when Rocket Internet just exited India. All the liquidity has drained out. There was no hopes in the world. And I said, let's just go on, move over to Singapore, start venture investing, and do venture building and acceleration. And that's how I got into that industry really on. Within SOSV, SOSV was actually very massively investing in general in India, Southeast Asia, all the emerging markets, because that is where we saw the most potential. Early stage investments, emerging markets, finding the next big winners. That is basically what our core focus was. Within SOSV, one of our biggest hits that you might know was actually BitMEX. We were one of the only investors in BitMEX, and we saw the potential of the right investment in an industry like this. What sort of potential does it hold? $100,000 investment can make you 175 million in 3 years. That was the potential at that point, what we saw in front of us. Fast forward, what was also happening at the same time around 2020, and my co-founder Ed and me, we were both in the same fund. We were seeing the evolution of Web3 coming out in the West, but very heavy Web2 investments were happening in emerging markets in Southeast Asia. What was really missing was there were no projects that were looking after this catered audience in India, Southeast Asia, all the emerging markets. This is a very different kind of audience when you compare it to the West. The average investment ticket sizes are small, disposable incomes are much less, the overall spending patterns are very different, and this is very similar across all of these markets. So the opportunities that we saw over here, and the products that were being really made out there, they were just not matching in general. These economies are driven in very different way. They have to be right incentivization programs, the right sort of adoption, mobile first. All of this is extremely important over here. So, and then the fun part happened was basically Wall Street bets. So I'm a degen, but I'm more of an older degen. I come from the trading world degen, So me and my co-founder, I was based out of India that time, he was in Taiwan, and Wall Street bets was really up there, like the best form of community investing that we had seen. Bunch of people coming together, sending bananas to a hedge fund's office, making millions of dollars in the process. It couldn't get any better than that, really. And we wanted to be that, we wanted to participate in that. But the reality was that It was so complicated for us just to buy one share of GME, GameStop, or anything. It was just too complicated, really. There were too many hoops to jump for us to just access that investment opportunity. And we realized that we were people in places, we were relatively, people with resources. To the average trader sitting in an emerging market with maybe $100 of disposable income, it is next to impossible to get access to these sort of yield opportunities that really come up across the world. So we thought, let's come up with a conduit solution that will basically create a level playing field, giving emerging markets the access to the same kind of instruments, the same kind of opportunities, the same kind of assets that probably high-tech traders in New York or Wall Street really get access to. After all, DeFi is all about this. It's about creating a level playing field. And that's how it all really started for us. And I think this drive was much larger in general than what we could have done in a venture capital fund or in that industry. We thought we have literally an opportunity to change the way an entire part of the world looks at Web3, invests with the right kind of instruments and opportunities. It was just too big to let go of, really.
So I just want to extend one part of my question because it becomes personal to everybody in the audience. I think that every industry requires a certain type of person to succeed. There's a certain fitment, right? So what should this audience be ready for? What sort of person is likely to win in Web3?
That's a good question, actually. It's a very interesting one. In general, you need to understand, what Web3 is right now is probably what maybe e-commerce was in the year 2000. We're very early. This is just the opening of it. There is no regulatory clarity because innovation always supersedes regulation. But in the middle of all of that is consumer protection. And that is what you're seeing. It's this nexus that is eventually happening right now. And we've seen this playbook in countries all over. India is a very large country. Not to succeed over here, you need to be risk-taking, but you also need to be risk-aware. You need to really understand what you're getting into. What I see right now is this massive, pumping of basically, selling of opium. That is what is really happening in the market right now. Just buy this and it'll change your life and, you'll become the next whatever. It doesn't work like that. Understand the fundamentals. When you go and invest in stock markets, do you read about them? Do you see the fundamentals? Do you do the financial analysis? Do you have a hedge strategy? The same thing applies to crypto. If you buy a Bitcoin or any crypto asset, it is more volatile. It has equal chances going up and down. And, people say that there are no fundamentals. The reality is even in stock markets, there are no fundamentals. If a billionaire tweets about a stock, it will also go up or down. That's the reality of it. Crypto is no different, really. The only thing is, how do you hedge it? Do you have access to the right kind of instruments? If I'm taking a spot position, am I shorting it on a derivative side with the same amount of leverage so my net position is hedged? And that is the key. Being hedged in volatile markets with volatile assets. If you don't understand it, don't invest in this. You will lose money, period. But if you get it the right way, you are literally sitting at a point in time where the new internet is being made. Opportunities are the most abundant that they'll ever be. Personally, there was also a very big FOMO element. I did not want to miss out on the train. I had seen the power of what a solid investment can really bring out of this. And if you feel the same, I think it's for you.
So I must tell you something that you didn't realize, but the last bit he talked about, which is hedging your position and the derivatives bit, etc. Guess which platform you can use to do that? ZKX! Hey, naturally. Always be selling. But before, Kriti wants to add to that, but here's something very interesting. So when there comes a token which says play to earn, which means play a game, which ordinarily is play to enjoy, but you play to earn. Then somebody says walk to earn, somebody says do X, Y, Z to earn. Why is it that every one of us, some of us who participated there, did not ask, okay, if they're paying us to do there, where is the money coming from? Shouldn't there have been the most obvious question? The 98.5% of the people who were not in our ecosystem were asking that question. Because we were making that money, either by playing or by the token pricing, we chose to not do that. But you know what? That is what brings in the crypto winter. That's what brings a bear market. But Kriti, you had to add to what Naman said.
Yeah, no, I think your question in terms of like what does it take to be more successful in Web3? So like obviously like everything that you need to be successful in Web2 is something that you need to be successful in Web3 as well, right? But I think there's one thing that stands out more so in this space. And I like to say that's the community part of it, right? There was a time, I want to say early 2000s, maybe late 90s, when the CEOs of companies would probably be the folks who are good at sales, good at marketing. And then there came an entire wave of tech companies, SaaS companies, where it was really the CTO mindset that would kind of lead the company from front. And I think with Web3, there's a very high chance that the lead community managers, the people who are actually able to get those partnerships, get those BD, that BD muscle like really intact, I think those will be the people who will actually lead companies from the front. So I do think that's something that's different and unique about Web3. That's not really been the case for a lot of Web2 and tech-first companies.
That's very interesting because, she talked about how the tech leaders were CEOs prior to that, the sales and marketing guys were CEOs. Prior to that, which means going to late 80s, early 90s, chartered accountants used to be the CEOs. Like all the companies, traditional companies were led by CAs, which was very interesting because I was studying to be an engineer and I was like, shucks, man, that means I can never become CEO. Luckily, that changed. Kriti, I have my last question for you, after which the last question for Kashif, and then the audience asks questions. So Kriti, and this audience members are mature enough to know that we are not talking about your fund. We are talking of VCs in general. I have been as annoyed with VCs as I have been with the government and with the media and with everybody. So it's with malice towards one and all. I think that VCs bring in a lot of energy. They bring in capital more than that the market can sometimes absorb. But they also bring in mindset, right? Which means a lot of VCs who entered in this space, let's say in the year 2020, 2000, some amount of 21, actually came in the mindset of, hey, there's some opportunity here. Let us tame this beast. Let's tell them what needs to be done. And then some of them would come to me and they would get some gyan. And I would say, listen, do you even have the mandate of investing in tokens? So what they would say is, no, we will invest in the equity of the company which has tokens. I'm like, have you thought about how these two different stakeholders will play out, etc.? So what do you think about, and you can speak of the Indian context, global context or general context, how do investors in this space, and I'm meaning institutional investors, need to grow up and gear up to be valuable participants?
What you just said bothers me a lot also. I think there are a lot of investors who don't understand that this is a different beast. This is a different instrument. For you to have the same thought process that you had 10 years back, for you to have the same instruments, the same structure, and go after a new market basically means you are not evolving fast enough and you are not evolving at the pace the builders and the community folks are evolving. So I don't think that today, the way business has operated as usual, that is simply not how it would work in Web3. It starts from the tiniest thing in terms of what you said, right? I mean, you need to be more open to token purchases instead of equities. You need to actually know what a DAO governance structure could probably look like. So like if you do hold a significant amount of tokens, can you actively make proposals? Can you actively participate and give your opinion, but in a DAO construct instead of kind of a board construct? On top of it, like let's say now if you do hold a lot of liquidity or a lot of like tokens of a certain project and it happens to be a DeFi project, you need to understand that there needs to be liquidity provided on top of owning a part of that. So I think there is and we've discussed this a lot internally at Sequoia also, like portfolio services. Today we have like a 70-member portfolio services team, and that does a lot for our Web2 companies. But I really am not sure how many of them can actually be repurposed for the type of companies we are investing in Web3 now. I think maybe we'll need somebody who's deeper at Discord, Twitter, like who can actually help actively manage communities. We'll need somebody who can do active market making. We'll need somebody who can do secondary market purchases. I think it's going to look very different from how it looked like Web2. And I do see a lot of investors not evolving, and that does bother me. So as builders in this space, you should also understand that it's important to get some of that reputed money, but you also need to understand, does the investor in front of you, are they open to changing with time? And if the answer to that is no, maybe they're not the best partners, which is why you're seeing a lot of like crypto native funds come up, and very few traditional funds are actually taking a very different approach, who are willing to say, you know what, these are 3-4 people who are going to do things differently. We're going to allocate separate capital. Like, if I can just give Sequoia's example, like we have raised a separate $400-500 million global fund that only does market making and open market purchases. Like, we know that that is so critical for any DeFi protocol. For us to be able to manage that from our traditional fund is just like fooling the other person and fooling ourselves. So you have to change with the time, and if your investor is not, then they're probably not the right partners.
For all the entrepreneurs here, Naman, I'll bring you in a moment, but for all the entrepreneurs here, when I was 17 years old and finishing class 12, I was like, if I get admission to engineering, my life is sorted. I got admission to engineering. 4 years later, I got a degree. My life was not sorted. Then I said, if I can do an MBA, my life will be sorted. And if I can do it abroad, my life will be truly sorted. I did that also. My life was not sorted. What I'm getting at is that when you don't have money, when you don't have investors who have given you money, you feel that if I got those millions, my project is sorted. Well, there are many entrepreneurs, even in this audience, because I recognize some of them, who have raised that money a year ago and 1.5 years ago. I know that their life is not sorted. What I'm getting at is that, sure, money helps, okay? But just getting any form of money is no good, right? I must tell you that investors can be extraordinarily painful. And somehow, their job is to give you that money initially. They have really no deliverable. They may choose to have deliverables later, but they don't have any other deliverable, while you have perpetual deliverables. So, I would strongly recommend, go slow, hesitate, think twice, and only then choose your investors. And this is not talking about your love life, okay? Because I know this also starts sounding like that.
I say this is like all money is not green. Basically, there's some money that's greener, there's some money that actually adds value, and there's some money that's just like, you're probably better off without it.
And money is always greener on the other project. Just to break an analogy. Naman.
Just to really add to it, it's something that we say on every investor call. Money is just secondary to us. It's the right money that is really, really important, and that makes all the difference in the world. But I wanted to really touch base on something Kriti said. It was essentially on governance. So there's a change coming in from an institutional perspective, and they're evolving with, I would say, changing times. What is also happening, what is the need of the hour, is also a change in the industry mindset. A movement where so if I talk about decentralization, governance in general, how governance needs to shift from being focused on large token holders and whales to retail, small institution token holders, to more retail token holders who don't have large positions. Can we really break apart token holding and governance? Isn't governance supposed to be with the people who really use the protocol, who really use it every day in and out, and not just buy the tokens on the early stages and just hold on to them? Why should they be reaping all the rewards if you're trading and you're using something day in and day out? And this is something that we felt was a massively misplaced element in the whole era of DAOs and in decentralized governance in general. And governance model that we have tried to really solve for it. We have a keynote after that, we'll go a little deep into it. But this is something that we realized that in order for mass adoption, governance and governance mechanisms need to also favor retail users. It should stop favoring the large whales. It should stop favoring the institutionals. And only then growth comes to an industry. So just wanted to really add to that.
Absolutely. The fancily dressed bouncer has already come on the stage. So that is now intimidating me from this side. But just Kashif, I'm going to give you the last word.
Yeah,
I'm going to give you just a minute or so for the answer for this question. Since you are the educator, give warnings to this audience about things they should beware of in Web3, and that's how we'll close the session.
Yeah, so first warning is that don't FOMO into, Web3, that everything is going to work. That is the mantra of it. That, first you need to really figure out as an investor that, if there is a project that is trying to give you a hopium, just get a little deeper into it. That what are the basics, what they are trying to solve, is the token necessary or not, what is the background of the team, is the founder is working, overtime, so is he working full-time or he's giving, his half of a time to this project, what is the team behind it, where they are located, why they need a token, all those different kind of questions that you are already asking in stocks, by the way. It's a very good thing that most of the Web3 project, they sound like a decentralized Web3 ecosystem that are going to achieve the dream, but most of them are securities, by the way. They are dependent upon the founder's ability to drive it. And once you are dependent upon the founder's ability, then it becomes a security, and that is what Harvey Test tells us in US as well. So you need to be very careful in that. So that is what I say that, if you really want to get into Web3, actually Web3, you need to understand the basics of Web3, and the foundation of Web3 started from Bitcoin. Not many people out here understand what is Merkle tree. By the way, if I have to ask you this question, what is Merkle tree and what is a hash function? So probably, not many people find it very difficult to understand the basis of Web3. So first you need to understand what is Web3 and why this is like special. Why it is different from Web1 and Web2. Once you answer that, once you get yourself educated, only then you will be able to relate it to, okay, all right, this project is trying to solve this and I need to get into Web3 maybe.
Excellent. Thank you very much. I hope you all gained from this. Please give a very big hand to everybody on the stage. If you want, we can take questions, but that's up to you.
No, we really want to take up questions from the audience, and even I have a bunch of them. Guys, first thing, Naman, thank you. The Web3Conf guys, Boydosh, who's Prankur, who else can I spot here? Yeah, hold on, 1 minute. Pehle thank you to bolne do na unko, 1 minute. So, guys, thank you so much for having this fabulous panel here. For the guys who know it, they know it that this is an amazing panel, great set of speakers, and that's the kind of information and that's the kind of download that we all need. So once again, give it up for the guys over here on stage. This actually shows the impact ki I'm talking so softly and yet people are clapping out loudly. This is the impact of what you guys have done. So that's a brilliant. Now, because I have the access, I'm going to quickly ask some questions and then we'll move on there. We'll have the questions a little shorter and answers also a little shorter.
So here's what we'll do. You can either name the person you want the answer from. You can't name more than one person, and regardless of how tempted we are, nobody else will chip in so that we can take more questions. Go ahead.
Absolutely. Thank you so much. Naman, I want to quickly ask you this question that you have been in the VC space, and now what is the difference between giving out money as a VC and raising money as an entrepreneur? Where is the thin line? Because the internal conversation that these guys are having after the call, right? What is the mindset there that you need to have?
That's a really nice question, Jander. So, there's a very big fundamental difference, right? Like, essentially when you're an entrepreneur, you're working towards something, you're really trying to build something, and you have a very certain way of looking at it. Call it something like a founder's tunnel vision maybe, but it does happen. You might think it doesn't happen, but it does happen, You think your product or your solution, it just hits the entire industry in a certain way, and you kind of stop. It just happens naturally. You'll stop seeing the larger picture sometimes. It's just natural. You feel your solution, what you're building towards, and it still happens even today. We all are really affected by it in one degree or the other. What you really miss out on sometimes as you're a founder, and obviously, you gain it because I've been a founder before. I've learned a lot from those early experiences. VC added on to it. So this time, I think we knew the right questions, we knew the right answers already in a lot of those questions, a lot of questions that were never asked. But yeah, having or coming out of that little founded tunnel vision, that what you're building for, how you see the world and how you see the problem, it might be very different from what your TG sees, what the overall industry sees. And getting that right perspective spot on is very tough. It's really difficult to nail it. It's the same thing when you're an entrepreneur on the other side, right? You're trying to build something. You need to understand your users. There are various user personas, and there's a user journey. Who is my first user? How do I get to them? Having a very core understanding of that is equally difficult. So when it comes to really raising money on one side or the other, you just, frankly speaking, the conversations are very organic and very different because each VC is very different. They look at the world differently, how you really align with them and what you really show value to them. A conversation with a Sequoia is very different from a conversation with an early stage angel investor. It's a very different conversation from an early stage accelerator like we were. So it's different conversations because each one of them is looking to really support you or get value out of you or bring value to you in a different stage of your journey. And that really changes. Being in VC, you already know all of this. So you know who to talk to, what to talk about, what's right, what's not. And also, a lot of the structuring, the regulatory side of it, that becomes much easier if you have core understanding. As a founder, I had no idea. The first time I saw a term sheet, you don't know what to really read about. Who's the lawyer to reach out to? You don't know any of that. And that's the real tricky part. So, yeah, that's what I would say.
Thank you.
It's quite a different experience either ways. And you just become better. Why are second-time founders much better? There's a reason for it. They've learned already. They've gone through that cycle. They already know the right answers. That's the reason second-round founders really make it big a lot of times.
So has there been times that in your presentation deck that you as a founder have written something and then the VC in you said, dude, this is BS?
It never happens like that. What really happens is that they will say something and they will ask a question and it just hits you like, oh, I can add that, or why didn't I add that? That's what really happens. We're mature enough not to really put BS in our presentation, so it kind of, we're not at that stage, unfortunately. But what it does happen, a lot of times a VC gives you a great idea. Hey, you guys are building this, you can add that. And it's like, yeah, you're right, we never thought about that. So it really happens like that.
No, what I meant was the entrepreneur in you at times takes over the VC in you. Like in your presentation, you write something. So as a content creator, right, we do some amazing content. बाद में जब edit table पे बैठते हैं, like, dude, this is BS, right? That is what I meant.
It's tough. That is an insider battle, right? Like you can't take off the hats you've really worn. You look at things in two ways. But it's good because all three of the co-founders, we bring very separate things to the table. My job in our trio is to wear the VC hat and wear it and see how the VC will read it. So that's my job. And I think we're doing a fab job at it in total as a team.
Come on, guys, give it up for Naman, everybody. Kriti, quick question. Though I'm so tempted to do a pitch right now, I need to ask you this question that I've had conversations with a lot of VCs in this space, and it's great catching up with them and trying to understand the theses behind why they are backing a particular project. I've been hearing a founder's problem, which is a new term that I got accustomed to when I started speaking with VCs in the space of Web3. Can you tell me that is there really a founder's problem in this space?
So you mean founder's problem?
Yeah. Okay. So basically that they're great ideas, but you don't have great founders for it. The ideas are great, but the founders perhaps...
Lack of good founders.
Yeah, I think I would categorize, like, currently there are two sets of founders more broadly in the Web3 space, and of course there's more, but I would say majority is either really degen, gets exactly how things are going at a technical level, but maybe finds it harder to zoom out and ask themselves what is a good problem to solve that can actually change lives of millions. That is one set of founders, I think. And then the second set of founders are founders who are actually coming more from the Web2 world, who've built businesses, very strategic, know how to think about a problem and a solution statement, but may not be as deeply technically involved in the blockchain side of things yet. So I think that's been the two set of founders that we are seeing come up. I do think that in another couple of quarters, there will be maturity on both ends, right? Like the folks who've moved in from Web3 will get way more smarter on the technical side of things than most of us combined. And then the folks on the technical side will intercept more people who are stronger on business side and community side. So I think we are, I want to say, more than a founder problem, we're kind of a couple of quarters away where these two personas start talking to each other and it kind of becomes one big holistic community that gets both sides of business building.
Brilliant. And, I think people have a to-do list. I like to have a not to-do list. And I would love to know from you that while somebody is pitching to a VC, right, what is like a major deal breaker? Just in the conversations or in the presentation.
I think being open to listening to a new thought. If somebody is too adamant about a certain way of life, I think it becomes hard to grow beyond a point of time. And you don't have to listen to the VC in the room. Like they might not know anything. But someday your consumer will tell you something that you would have probably not thought of. But if you are a very closed-minded person and you think life works a certain way and this is how I'm going to do this and I'm not going to listen to anyone, I've seen that backfire more often than work.
Kriti, this thing about being close-minded, rigid, not open to suggestion, were you listing that as the founder's problem or the VC's problem?
I think it's a problem on both ends. Both ends.
This is brilliant. You know, so out there, everyone out there, you know, please be open for feedback, good, bad, ugly. Have your own filtration process, but take it in, because at the end of the day, what really is important is being flexible. And I'm saying that with 0.01% of experience, but thank you so much. Come on, guys, give it up for Kriti. Now, my dear friend Kashu Bhai, you are in the space of education. You're doing a great job. There is no questions on it. But, you know, when it comes to education, right, and especially in your space, there are a lot of guys who want to start a YouTube channel. There are a lot of guys who want to give out gyan. There are a lot of guys who want to say that, boss, I want to be, telling people what to do. How does one really qualify to do that?
Yeah, so it's a good question actually. To be very honest, content creation in Web3 is a game of patience. So there are two approaches to that. You can be a content creator and grow fast if you talk about pricing. Say if you talk about pricing, if you talk about various small caps, and if you talk about the returns. So definitely your channel is really going to grow fast, and you have those catchy thumbnails and titles. So yes, your channel will grow fast and you'll have numbers. But having numbers doesn't mean that you have impact. So what kind of content creator you want to become in life? A content creator with numbers or a content creator with impact? So that is the choice any content creator has to choose. And this doesn't only apply to content creators, even the organization, even the Web3 platforms out here. You cannot survive without a community. So my advice to you, whosoever is building in Web3 space, actually Web3 founder is a content creator in itself. Without a community, your project is not going to thrive as compared to somebody who's got a good community. It's all about community at the end of the day in Web3. So you also need to decide that what kind of community you need to build. And I think when you choose the difficult part, that is the path with a lot of patience, persistence, and a real education, that path is difficult. But over the period of time, you'll realize that as the industry grows, you as a content creator, your platform, your community also grows over time. And the kind of impact it will leave will be huge and massive, and it will be remembered in times to come. So I have chosen the difficult path, and I sincerely hope that many will choose the difficult part, and when the history will be repeated and when the history will be reviewed, somebody can just say, oh my God, this guy did a great job. So what kind of content creator you want to become? You need to ask this question to yourself.
Give it up for that answer, everyone. In fact, I was talking to Francisco there, who is going to be the speaker up next. It's not about the numbers. It is not about how many Twitter followers you have. It is not about how many YouTube followers subscribers you have. What really matters. So first thing, please don't go to someone and say how many Twitter followers you have. Research it yourself. It's very simple.
Can I add just last?
Please.
The biggest content creator this world saw, was those 9 pages written by Satoshi Nakamoto. Those 9 pages, the content that he made changed the world. So that is the kind of impact you need to have as a content creator. So numbers doesn't matter. Your 9 pages changed the world. So that is the kind of impact you need to have.
And
that
that's
is the
a
kind of
mic
vision
drop
you have.
moment.
Thank you.
Very, very well said. I think Kashif bhai should always be given an opportunity to speak at the end, because even in our Twitter spaces we say, ki, bhai, don't let Kashif bhai speak first. Then we won't have any more content left. So we are going to follow that the next time. AK. So first thing, big fan of your energy, big fan of your vibe. I think that is what makes you so easy to connect with, and that really matters. And I think a lot of founders, a lot of folks out there should take massive learnings from these guys out here, because once you're able to connect with them, you can talk to them, you can have ideas exchange, and that is when magic begins to happen. But my question to you is about education, right? You have studied abroad, you have done some amazing stuff, right? Slowly the entry barrier is going lower or higher, dependingly on what space and what form of thing that is there. But what I want to ask you is that someone who perhaps is a 10th standard dropout, someone who perhaps has no technical skill yet, but kind of understands stuff, right? Do they have a place in Web3?
So 5-6 years ago, I knew at least 100 people who were in crypto. I'm not using the word Web3, it was not very popular then. I don't see even one of them in this room right now. And quite likely you don't know any of them. Though a lot of fruit that you are reaping today, or the benefits you have today, because a lot of was done by then, right? That means quite likely 5 years from now, nobody will know you. Right? And that's the natural evolution of thing. I think that when you use a payment app, maybe you use Paytm, you use UPI, etc., there's almost nobody in this room who really knows how that works, the technology around it, or how the databasing works, how the messaging works, how the settlement works, etc. But we use it very well. So when the ecosystem develops, actually there's room for everybody. There's a room for the user of Paytm, there's a room for somebody who will sell on Paytm, there's a room of somebody who will invest in the Paytm shares, etc. So the question that he asked me about, whether it is education, whether it's learning, whether it's ability, I think that Web3 as a paradigm is large enough for every one of us, regardless of whether, we are a 9 blind men in the elephant kind of situation, for us to have our own space in the sun, which is large enough. That's what got us into this room, right? So the answer is very much so, and that is what I would encourage all of you to do. Find your space under this sun, and you'll do good. Thank you.
Thank you so much for having us here. Sorry, मैं उल्टा बोला ना. I said thank you so much for being here. Ladies and gentlemen, give it up for the panel over here by ZKX. Thank you so much.